All right, good morning, guys. Another webinar here. Today we're going to talk about using oscillating indicators to recognize market strength. Okay, another little piece of the puzzle to it's going to add confluence to our existing strategy. Okay, we're going to, as you guys know, the main way that we are looking at the market is as a repetitive emotional pattern. Okay, a repetitive emotional pattern that is going to start with an impulsive move, whether it's up or down, and that move can be measured with the Fibonacci to tell you how far or how low, how big you could grow or decline from that point. And the Elliott wave is the way that it gets there. Okay, the way that we map it out along the way through the impulses and the retracements. And we use Fibonacci along the way for our entry points and our targets to map that out as we go. And then we use things like oscillating indicators to give us confluence of strength and how the market may be reacting in that time frame. Okay, the two main indicators that I use, the main one that I use is the Stochastic RSI. Okay, I'll use the Stochastic RSI, and I'll use the MACD at times, the median average convergence and divergence. Okay, this one's not as important to me. I do use it every now and then as like a little bit of a backup indicator, but my main ones that I really like to use are for oscillating indicators would be the Stochastic RSI. It's really a golden indicator, guys. This one is one of the ones that I leave on the chart all the time, and I will use it to give me confluence as to how the strength in the market is at the time that I'm looking for the trade. Okay. Now, an example of that would be here. Okay, we're already looking at Bitcoin here, and I just want to point out a couple things here of what we look for in a trade to kind of give us a sense of when we might be getting a correction, when we might be hitting resistance. In this example, when we might be hitting resistance. If we're going down, if we were in this part here, we would be talking about, when we might be hitting support. But using this example here, we have a couple factors here with Bitcoin. Okay, like it had, a high here, a lower high. I'm just kind of skipping this SEC wick right here because it's not true to the trend. Okay. So we had a high, a lower high, another lower high. And if we draw that line into the future here, okay, this is telling us our resistance that we could meet at this point. Okay, so we can easily just draw that line across those points and then just extend it into the future. So about right there. And it's telling us that we're coming, this would be a very resistive point. Okay, for Bitcoin. It has to clear this line to get out of the recovery mode that it's in right now. Okay. Now we would also use our Fibonacci to tell us where we might be, meeting resistance on that way as well. Okay, from our extreme high there to our extreme low of this move, right there, right about there. Move a little bit more like about that. It's telling us that our 78.6 line on the way back up is right about here, right where this red line of resistance meets. So we got kind of two levels of resistance here that are meeting up, that are showing us it's going to be hard for the price to move beyond this line. That's not saying it won't move beyond that line. It's just telling you that here we're going to meet some resistance. Okay, we're going to meet some resistance there. So how do we decide when we want to take the trade? Okay, and that's how we want to kind of get into the oscillating indicators. Okay, now you can tell here this entire move from the bottom has been riding on this trend. Okay, it's even though that line is shooting straight up in the air, you can scroll your, adjust your chart to where you can see that this entire move has been respecting this line along the way. So we have a couple indications as we head into this area here. Okay, we look at this and we say, okay, Bitcoin's heading for resistance here with this red line and the 78.6. it's riding on the support trend. So somewhere in this area, it has to decide, is it going to break through this resistance or is it going to break down the support? And as we watch this along the way, we can kind of flip through the time frames and see how strong the market is. Okay, so here on the let's explain the stochastic RSI first before we go further. The stochastic RSI here. I'm just going to get rid of the MACD for a second. Let's just talk about the stochastic. This one really is golden, guys. This is like, you can't trade on this indicator alone, but when you use it with our strategy, it really is giving us an indication of how the market may react during that time that where we're looking. Okay, so this is an oscillating indicator. This will move up and down with the strength of the market. When the oscillation is down in this area below the purple band or below 20, it is considered oversold, weak, its weakest conditions. And when it's above 80 in this, above the purple band here, it's considered overbought or at its strongest point in the market. So this oscillates. This will oscillate on every time frame. Okay, we're gonna, I use the stochastic RSI for lots of indications in my trade. If I'm looking for a larger move to happen in the trend changing, like let's say for instance this move. I'm just gonna hide my cloud for right now. Let's say for instance this move, it's been trending up for a while here on this 6 hour, and even if we look on the daily, we can see that it's been respecting that line. Okay, but what do we see here is that our daily strength has been very high. This is the maximum daily strength that we could be at right in this area. It's basically about 100 right here, 99. You can see the numbers right here. And if you hold it to the far right, it's just telling you the current position. So it's about 97, 97. So these are, these are different averages of, of price based on these, open and close prices. These are the default settings. I haven't tweaked them for cryptocurrency like I did for the Ichimoku cloud because they seem to be pretty right on with the default settings. But what we're really looking for here is that when the blue line crosses the red line here, just to keep it simple, we start to grow again. Okay, and then the same way so at the top, when the blue line falls below the red line, okay, we're starting to decline in strength. So this will oscillate up and down. Like here, this blue line crossed right in this area as we started to gain our strength and do our move up. And then it stayed in this relative area while it was still climbing in price here. But right about here, where the market decided it wanted to start selling off, that's when we got our crossover here. And we started to lose our strength, okay? Until right about here, then it crossed, we got a little bit of a run. So you'll see that most of the time the price will move with the direction of the strength indicator. If it doesn't, and if you have a situation where, let's say, the price is continuing up, but the oscillation is going down, then that's called divergence. And most of the time, the price will wind up actually following the strength. So if you have a move that's going up and the strength of the market is going down, it's kind of an indication that your move going up is running out of strength and it's most likely going to come to an end, soon. There's not like the market strength behind it. So we'll look through the charts for examples of divergence a little bit later, but just to tell you that we're watching this indication with the way that the market moves to tell us if that move could be expiring, if that move could be running out of strength, running out of steam. Now I use the stochastic RSI on all time frames to kind of tell me how much strength a move could have behind it in that relative time frame. Meaning that if the price comes up here and starts hitting this resistance area and we start to really, break down and not make it through this red line, and the price starts to come on the other side of this green line and breaks this support, and we get a crossover here where the daily starts, pointing down like this, starts coming down and getting weaker, then that's telling me that, hey, we didn't make it through resistance. We're breaking down our support, and our daily strength is getting weaker. Okay, so you want to keep that in mind. But when the daily strength is maximum pinned like this, it is also telling you that this is the time that the market does have to make those kind of impulsive, strong moves. So you don't want to, just say, oh, it's overbought, I should sell, because, this is when the market's at its maximum strength. You want to have other confluent factors, and using this example, it would be like, okay, if we keep, over the next day, let's say, if we keep breaking down and we cannot break this line over the next day, if we cannot break this line and we keep getting wicks up here, and it's kind of showing us that we're getting like a little bit of a sell-off here, and we're not breaking that line, and we're kind of coming into this line and breaking down the support. If all that starts to happen while this is getting a crossover to start pointing down, telling us that the strength is deteriorating in the market, then that's a little bit of an indication that, okay, we got a crossover on the daily stochastic RSI. The price is breaking down. It couldn't make it through resistance. It's breaking down support. So we would use that indication as confluence to tell us that that this move might be running out of steam. Okay, might be running out of energy, or might be running out of strength. So we want to always consider that in our trade, whether it's something like this, on like a middle time frame, on like a daily. This is a large move that Bitcoin's making. Okay, this is a large move that Bitcoin's making, and as we all know, this is having an effect on altcoins, especially once this bounced right here, this move up, this sharp move up, it caused a sell down in the altcoins. And you can almost pull up the two charts comparatively and see, as one goes up, the other one goes down. So that's what I was saying this morning, guys. Altcoins aren't dead. They're just waiting for Bitcoin to finish this impulsive move and correct or consolidate, and then the altcoins will bounce again. They'll bounce off their support trends or their retracement levels. So one correlates with the other. Okay, one correlates with the other. So in a move like this on a middle time frame, we really want to see a couple things. We want to see that this price does not break through this area, does not break through the 78.6 resistance, that it actually is breaking down support, and that our stochastic RSI is deteriorating, is going down. Okay, now we would use that in all time frames. Okay, we could literally, okay, I'm looking at the perpetual contracts here. 1 second, let me go to Bitfinex here, guys. Same chart, but a little bit more relevant to what you guys might be looking at for the spot price. Okay, so as we use this indicator here, I use it on every time frame. Okay, honestly, it's every single time frame. Like if we start going up in higher time frames, we can tell, okay, for instance, on the higher time frame, Bitcoin, since here, basically since this whole year run, the strength of the market has been high on a monthly level. I mean, we are high up here. Now, the last time we sold down here, we got a monthly cross, but that doesn't mean we're just going to, continue down in our months. All right. This is like when you look at the stochastic RSI, it's kind of like flipping through different time levels. I mean, you're going to come up with your own comfortable preference of how you want to put all those pieces of the puzzle together. But when I look at something like this, I will look first at the higher time frames and say, okay, like for instance, for Bitcoin, this is telling me the strength has been very high for months and months. Now, until this really starts coming down in here, we're probably not going to get a downtrend. But this is telling me that since this last move right here where we sold off, that we got a crossover and we need to pull this back up to be strong again, okay? But that is getting pulled back up on other levels now, other time frames, okay? For instance, like this entire move right here where we sold down these whole last, I think it was about 2.5 weeks, basically. Yeah, just about 2 weeks. That 2 week period where we sold down, we got a crossover on our weekly. Now, mind you, our weekly was very strong for a while. This whole move between here and here, our weekly was strong. It was climbing, it was climbing, it was climbing. But when we had this sell down right here, basically the SEC sell down is the first thing that tripped it. Tripped it over right here where it crossed. That kind of showed us that after that sell down, the market started to get weaker. Okay, like it's kind of like it started to deteriorate in its strength. It wasn't growing in strength anymore. It was declining in strength. Okay, and we see a reflection of that, how the price continued to drop until we got, right about in here where we got a weekly crossover again. We're just starting now to get a little bit of a weekly crossover. Now, if we sell down here at that resistance point and retrace to about, 1100 or so, or like 1050, this move up that we're doing right now, once it ends and it starts to consolidate or correct, this weekly could flatten out and wait a little bit longer. To do its crossover. Okay. So it's just about putting all the pieces of the puzzle together. Okay, like our 3-day strength is actually showing us that we're more likely now to do some sort of a consolidation or correction in here from this move, but not continue down. Like meaning like this move that we're in right now, okay? This move from 960 or whatever it is back up here to about 1200. The fact that we're getting this 3-day crossover and we have this strength behind it, and that's kind of pulling our weekly to wanting to cross as well, is kind of an indication that we're going to continue to grow. Well, how did that happen? David is now the pivot. Whoa. Sorry, guys. I don't know what just happened here. No. Hold on, guys. How did that happen? No. Share my screen. Reply. Ready when you are. Share my screen. Wow. Okay. I think everything's back to normal. Let me just unmute you guys to make sure this is all back to normal.
Everyone else is now unmuted.
This is all back to normal. You guys see my screen and I'm the presenter again?
Yeah, we're good now.
Okay, I have no idea how that happened, guys. Sorry about that. Okay.
Everyone else is now muted.
Okay. So this is telling me here that as this move expires, okay, and this move, runs into this resistive area, it's more likely that we're going to continue and go up into the higher areas of price. But if we even make a little correction here, we're still going to be strong on a 3-day, and it's kind of pulling the weight of the weekly behind it. All right. But if we look at the daily, where we get this correction up here, whether it happens at this line or it happens up here, whenever this move that we're in right here expires, okay, whether it comes to here and sells down or whether it comes higher and sells down, when that move expires, we're going to get a cross of our daily here and some sort of an oscillation. We may not go all the way down to the bottom. We may do something like this where it just oscillates like this. But that's going to be some sort of an indication that this move is expiring, okay, that this move is running out of strength. Now, when we look at the higher time frames, though, it kind of tells us that it's just probably going to be a correction, okay? It's not going to be something that will take us all the way back down to 800 again, so to say, because now we're getting we're backing ourselves up with higher time frame strength that has crossed over. Okay, we're getting stronger again. If we were making this move here, we're running into resistance, and this was crossing over in this area, then it would be more of an indication that okay, we may do a full oscillation, or we may not have higher time frame strength for a little while. Okay. Now I'll use this indicator in every time frame, guys. I mean, honestly, using this indicator almost even by itself with some simple idea of the market structure is what led me to know that XRP Ripple was going to break out, Stellar was going to break out, all of them, because when they reached their point where they were breaking out, the strength was ready to climb. The strength was ready to climb. Now, let me show you that real quick here. Let's look at XRP. Okay. Now let's start at the beginning. Okay, at the beginning, like when we're first looking at a market, I start all the way out and zoom in. I start with the monthly. Okay, I start at the monthly. So something like this, when we see a market cycle, okay. Well, and this could be, we're looking on the higher time frame because now this is telling us. I want to start with the higher time frame because this is telling us the bigger moves that could come, the bigger grand waves that could come, the bigger market cycles that could come. So when we already saw that this was, in a downtrend here for a long time, I think it was like even 2 years or something. Our first indication is that this red line is going to have to break at some point for the price to start going up again. Okay? And when that line broke right here, we were just starting to get a monthly crossover. Just starting to get a monthly crossover. So back when I was talking about Ripple being a buy at like 500, 600 back in this area, we were just starting to get a crossover here on our monthly. It was kind of an indication to me that if this thing is going to break out and going to start a new impulsive cycle, it has a lot of higher time frame strength behind it. Okay? Kind of telling me that this entire downtrend that this coin was in, the entire downtrend, the market strength was weak. And here, one time in here, it tried to oscillate back over on a higher time frame, but still was in resistance. It wasn't time. It wasn't ready. And spent more months downtrending. But when it broke this line, and it had this crossover of monthly strength behind it, that's kind of an indication that we're starting a new market cycle. Like that this thing now has a lot of higher time frame strength behind it, meaning it has a lot of room to grow. Now that it broke through the resistance, it has a lot of the only way I can really describe it is like it's like got a lot of gas in the tank for its journey that it could possibly make, or a lot of wind in its sails to push it that far, into a new market cycle. Now, these things have to correlate with each other. Like if we see this thing breaking out right here, trying to break out, and our monthly strength is falling, or it's not crossing yet, then it's kind of an indication that it's not happening now. And you can't just play a stochastic RSI crossing strategy either, because it won't be right all the time. Like, I mean, look how it crossed right here, giving us like 2 months right here. Even the volume came in here, but it wasn't ready. It didn't break the line. It didn't break out yet. The conditions weren't right. So you don't want to use the stochastic RSI by itself to tell you, oh, I should buy or I should sell off of this crossing, because it's only going to be right about maybe 40% of the time. I mean, they do have a stochastic RSI strategy that you can, put on your chart here with the indicators. But like I said, it's not, it just takes into consideration how the strength is working, but it doesn't take into consideration anything else. No market cycles, no trends, no, previous price action, nothing like that. It just is going to tell you how the strength in the market is reacting. But when you use it as confluence with your trades, it will give you that extra layer of assurance that, okay, maybe it is happening in this time frame. Or in something like this, now this is telling us this broke the red line. It already started a market cycle here. Okay, basically, this thing had a whole market cycle, and then it pops out here and it does a big move. And what does it do? It creates disbelief in the market, Well, that's the beginning of the market cycle. And if you really think about the sentiment that Ripple left in the market was disbelief. Nobody really could believe $2 billion market cap in a weekend, and this thing was crippled for years and it was downtrending for years. So this kind of a move paints disbelief in the market. And now that we see that it broke this red line, it painted the disbelief of the emotional cycle into the market. And we have this huge monthly stochastic RSI that has a lot of room to grow. Then we can kind of put the pieces of the puzzle together and say, okay, this looks like it's really starting a new market cycle, is most likely going to try to make a new all-time high and start taking out all of these, retracement levels back up, meaning that, we can measure this move right here. Sound is low. Well, let's check it out. There we go, guys. That should work. I don't know why it was all the way down. Somehow the settings just got messed up and all of a sudden somebody was a presenter. I don't know how that happened. I apologize for that. Is that a little better, the sound? Probably is. Okay. So when we see something like this, like a huge market cycle that happened with a breakout, leaving the market in disbelief, and a huge, amount of strength that could come out of this, meaning that, this thing oscillated down here. It already hit its weakest point. So the market's growing now. It's growing now on a higher time frame level. So when you see something like that, it gives us an indication that there's a larger move that could come out of this. Okay, and we already know that because one market cycle leads to another, and when things break out, they want to make a new all-time high. So we already know that, and when we see something like this kind of a strength, it kind of gives us confluence that, all right, we are going to continue up, and this is a good indication that this is going to have a lot of strength to grow out of this move for months to come, possibly. At least this entire move downtrending from this oscillation to this oscillation was like 120 days. Or is it 1,200? 122 days. Yeah. So, we could very well get a couple months out of this move of just, increasing its strength, the strength in the market getting behind it. It went through its whole time where the market was weak. It broke out. So now it's time for the market to grow in strength, So, but mind you, as this, monthly stochastic RSI is continuing to grow, the smaller time frames are going to oscillate. Okay, so this is kind of like your bigger picture that you're looking at, and you're saying, okay, this thing looks like it could be making a new market cycle. It has a lot of higher time frame monthly strength to push us to higher levels. So then you basically are just kind of like keeping that in your mind, that there's a lot of higher, a lot of strength that could come out of this as we grow for the next couple months. And then you basically, keep that in your mind, and you play the lower time frames. So then you would just kind of go through and say, okay, well, let me buy the lows. As this thing, continues to grow. Our higher time frame strength is growing. So on these, like let's say 12-hour times and stuff like that, we're going to see our trade entries and our possibilities of when this thing could move again. Okay, so first of all, in relation to Fibonacci, okay, this thing right here, we basically had a nice move. I'm not sure if I took the measurement from here. Let's see. I think I took it from over here where the actual money went into the market. Yeah, right about here where we broke out. Okay, now I'm taking this Fibonacci right from the base of that line. Let me get this light out of here. Okay, now I'm looking at this like this. Like I was explaining the other day, I use the Fibonacci from where the market changes. Okay, you can get a reading from the bottom of the market to the top of the market, sure. But this is telling me that right here, okay, right here we were basically consolidating out, and then boom, right here. That volume came in right here, and we broke out. We broke out from this point right here. So that's where I'm measuring. Because whoever decided to put the money in, they're not worried about protecting these prices. They're worried about protecting their investment based on where they got into the market. Okay, so the market changes. So yeah, I've been told before, people tell me, oh, you're using the Fibonacci wrong. It should be from extreme high to extreme low. And I've tried that. But I've came to my own conclusions that when I use it from where the market changes, then I'm actually measuring this change. You know what I mean? Like the volume came in here. There's some volume here, but the market broke out and changed right here. Sure, we had, this like ramping up, but right here, okay, right here where this volume came in, this did an impulsive move up that now held a 78.6 retracement perfectly of that move. Okay, so the Fibonacci seems to me that when I use it from the actual change in the market, I get a better idea of my entry. Meaning that if I go from the extreme bottom here with the Fibonacci, my price is just kind of, floating in the middle there. And I don't really have an exact, an exact point. If I want to buy the 61, I'm below it. If I want to buy the 78.6, I'm above it. So it didn't really, throughout the years, I started saying, well, that only works so well, but when you measure from where the market actually changed, from where the breakout happened and the actual move that you're trying to get a retracement of, it seems more correct. Okay. You guys can fool around with your Fibonacci's and get your entries on what points that you want, but I found that when I measure the actual move, and it kind of makes sense to me when I do it, because think about it. If I have a lot of money and I see that Ripple's breaking out and I want to buy in this area under 1,000, and I come in and I buy a whole lot of Ripple, and I'm like a whale, I buy a whole lot of Ripple in this area, I'm expecting that there's going to be some sort of a retrace. If I buy a lot of Ripple and I create this spike, or a lot of people come in and they create this spike, then that's going to create a chain effect because it broke out. And so the price will continue to, hold a pattern and break out and rise until it doesn't have any more juice in it to go any further. And then it's going to drop down and retrace. Now, whoever put the money in here, or whoever, most of the people who are, trying to hold this strength of this market and hold this market up, they put their money in here. So they're trying to protect, the 78% retracement of it here, not the money that was put in here, if that makes sense. So we can see now that we had this move. Okay, we know that Ripple has a very high time frame stochastic RSI strength. Okay, the monthly is growing, meaning that this thing's most likely going to continue to try to make a new all-time high. Okay, it broke out from 2 years of downtrend. So we want to get in on the lows. Okay, so this thing made its move. And then when we look to get in, we look to get in around the 78.6. That's why I was saying the other day, I'm buying Ripple again under 3,000. Okay, under 3,000 over the next couple of days to gain a position in the market for the next time it wants to rise. Knowing that it really shouldn't dip too far below here. I mean, even when Bitcoin Bitcoin rose in the last 2 days and everything else dumped, this has basically remained pretty stable in its retracement zone because it wants to continue up. It has that higher time frame strength behind it. Sorry, you guys probably hear the toucans back there. They're pretty loud today. But we're looking for something like this happen as we get a 12-hour crossover. I mean, look at this. As this holds its strength here in the 78.6 area and it consolidates, now we have to think about the bigger picture. Okay, this thing's growing on the monthly. It's most likely going to make a new all-time high and try to do another wave out of this. So when's that wave going to happen? Well, after it consolidates here for long enough and it holds this area and our strength starts to grow again. Like right now, our 12-hour strength is nothing. It's on the floor. So when we get, once we hold this area for long enough and we get this 12-hour crossover and we start to grow in strength again, then that's our little bit of an indication that we may actually be leaving this area. Okay, we may actually be leaving this area to start a next wave on this crossover of the 12-hour. Or let's see how it looks on the 6-hour. Let's see on the 6-hour. Also needs to come out of here. Okay, same way. So, you know, if we get, now this could chop around down here for a while and consolidate down here for a while. And that really is kind of reflection of what Bitcoin's going to do. You know, I can honestly tell you, like, this thing will probably just consolidate here and in this area if Bitcoin continues to go up. But if Bitcoin reaches its resistance level and, you know, and corrects or dumps down or, you know, wants to consolidate, then this will have the moment where the money comes flowing back in and, you know, we get that cross. Okay. Now this has been selling down for a while where we probably are even, we might have to wait until we get a cross on our daily. Okay. And that, look, that seems like it's coming too. Okay. This thing has been selling down since that move. Selling down, selling down. So here's another indication. This consolidation in this area may take until this daily wants to cross again. Okay? Now our higher time frames, like our, you know, our monthly, showing us there's a lot of room to grow. But before we grow more, we have to reset our strength on other time frames, if that makes sense. Like we have to, this thing's not just going to continue back up after it hits this retracement point when the daily strength is weakening and weakening and weakening and weakening. You have to, you know, we're going to get out of this consolidation zone after our strengths reset. Okay? Our higher time frame, our month is strong. It's telling us it has plenty of room to grow. Let's check out our weekly, how that relates. Okay? Okay, weekly. We're at the top here, and we're starting to touch, but we're not like, we're at a point where we're strong on the weekly, but these two here can touch and pin together and remain in this area for weeks. Literally, for weeks. I mean, if we look at Dash stayed up here on the weekly for weeks. Okay, just pinned on the 3-day and on the weekly for a long time. While the lower time frames kind of oscillated and got their retracements and their impulses and retracements, and the monthly was just growing strong, these indicators on like the weekly and the 3-day were just pinned here with their maximum strength. So, you know, I always use like the highest time frame to start and say where could this journey be going? Okay? And for Ripple, this is telling us, hey, this journey could go along for months. Okay? And then kind of go down the time frames and say, okay, well, our weekly is still very strong. And if we get that like daily crossover, let's say, or 12-hour crossover, and we start to go up again, well, this kind of flattens out and just kind of pins up here for a while. Same thing with our 3-day. Our 3-day would probably just stay in this area like this and just stay pinned here for a while. Stay pinned up here for a while. So all these, you know, strength, relationships of strength and time, they reflect upon each other. You know, like let's look at Dash now. Because Dash just went through a large move. And it's actually, it's actually still strong on the monthly. Okay? Still strong on the monthly. It's getting a 3-day crossover too. Okay, well, let's check this out. Dash here, when Dash broke out here, let's get rid of this Fibonacci here. Okay. When Dash broke out and left behind all of this previous price action, okay, right here, when it broke that line, it was starting a new monthly cross. Okay, Dash has so much strength behind it on the monthly, which is why it pulled off the big move that it pulled off here. Okay, because the monthly was really just starting to grow, And while that monthly was growing, the weekly up here was pinned for weeks. For weeks up here. I mean, we spent up here, you know, 40, well, let's say, basically from when we got up here to where we fell, basically almost 2 months. For almost 2 months, the weekly stayed pinned up here at maximum strength until it finally reached its, you know, almost all of its Fibonacci extensions up and targets, and then boom, we got a weekly crossover. Okay, we got a weekly crossover. Now here's where we kind of try to put the pieces of the puzzle together. Okay, we look at Dash on like a monthly, and we say, okay, that monthly stochastic RSI is still pretty strong. There's plenty of room to get up here and get strong still. So is it a possibility that this might bounce and get another wave out of it? You know, that's the way that we need to look at it. Then we start looking at the weekly. Okay, the weekly obviously crossed over, started to get weak and fall. But right here where we bounced, okay, we seem to get some more buyers step in. So this could very well turn around mid-journey on the week. If this thing starts getting higher and higher and higher again, this will tilt and turn and oscillate back up. And there's an indication that that could happen when we look at like our 3-day. Look, this thing is now sold off for a long time after this 3-day was pinned up here for basically the whole pump. The whole pump here. The 3-day was pinned, just like the weekly. Up here, up here, up here for 2 months almost. But as soon as it sold down, we got a crossover on our 3-day telling us, oh, we're running out of strength on a higher time frame. But mind you, the whole time that this 3-day is falling, the monthly is still growing. Okay, the monthly is still growing, telling us that, you know, we most likely going to find a retracement in here and continue on, because the monthly has the room to keep getting stronger once these, you know, lower time frames than the monthly start to oscillate in strength. And so now this is almost a full oscillation in the 3-day strength. Now our weekly, like we said, is still falling, but it could turn around mid-flight, just like this on the 3-day turned around mid-flight. So this is telling us here, this entire move, the 3-day strength was pinned, it was strong. But now that it sold off here, we've had a whole, now what, like almost 2 weeks? Yeah, just about 2 weeks here that this thing has been falling, and running out of strength. The whole time this fell, the 3-day strength was falling, to the point where now, right in this area here, the 3-day was completely oversold. Okay, we're hitting points here where like the 3-day is the weakest point that it could be here on the floor. There's no reason for, you know, it's kind of wearing out the sellers and it's ready to oscillate in strength again. So this is a kind of an indication here, like kind of in coordinates with Bitcoin even. If Bitcoin gets to the point where it, you know, wants to dump or consolidate, Dash is set up to get strong again during that consolidation of Bitcoin or during that correction of Bitcoin. Okay? So we want to keep all these factors in mind. You know, like if Dash gets across here and holds, you know, this retracement and holds in this area and gets another cross and starts to climb, that's going to be another good wave set that could come out of that as this strength continues to climb. Okay? And then we can, you know, go down our levels here. Okay? Our daily here is, you know, trying to get stronger, getting back up into this band area. Okay? And then we'll use our smaller time frames even yet for maybe our entries on where we would want to get in on a move like that. Okay? And let's look here at Dash for this entire move that it did. Okay. Let's look at Dash on the hourly. Okay. Now here, where Dash sold all the way down, right when we had this dump, okay, look where the hourly strength was. Okay, it was already pretty weak. It was like weakening, getting oscillations, but it kept getting weaker. As this price is going down, okay, as this price is going down, sloping down like this, our oscillations in here are actually sloping down too. Okay, like this is getting, the market's getting weaker. Okay, like every time it comes up, it gets a little bit weaker, And then here, all the way down here, where it's sold off, okay, it bounced. This was actually a Fibonacci point. Okay, we'll go back and put the Fibonacci on there in a second, but this was a Fibonacci level right here of 88.3. Okay, it got panic dumped all the way down to 88.3. But when it bounced right there, what started happening? We got an oscillation here and a nice strong run in our strength. And our strength is kind of like working its way back up again. Okay, it's working its way back up again in price. But this move right here crossed right here. And I bet you it crossed on a higher time frame too. Like let's say like a 4 hour. Right here. Same way so. Let's get rid of this. So using the stochastic RSI by itself, okay, here where we sold down, down, boom, we dumped, and basically the 4 hour was at the weakest it could be. And then what happened out of that? It got another oscillation back up, and the market started to climb up again out of there. And then, but this thing will oscillate again, loses its strength again. But now this is kind of an indication here. This lost its strength again and did a complete oscillation here where it's, oversold again, but our prices are getting higher. Okay, even though it's just a little bit, we're getting some higher lows. Okay, some higher lows. So these are the kind of things that we want to look for, like in relation to what the strength indicator is telling us, in kind of like in relationship to the price. Okay, like like if we're expecting like the market to turn around at a certain price, or we want to buy at this Fibonacci level or something, we want to see if it kind of correlates with the strength. If we're getting it at a good time where the market could turn around right here based on the point we want to enter and where the strength of the market is. Okay, let me think of a good example recently on a trade. XEM. XEM is a really good recent example here. Okay. When I was mentioning for us to get into XEM, this one right here. Okay, I'm gonna look at this one like that. I like the 6 hour, guys, because 6 hours is like my favorite almost. It's like the middle of the road kind of time frame. All right. Let me just put my cloud back on here because it's confluence. Okay. Now, we saw that this was basically trending in this relative area like this. Okay. Okay. Now, when I gave a trade last week on XEM and was saying, about 1250-ish area, okay, right in here. This is why, okay, like I wanted to show you how these pieces of the puzzle kind of come together. We're looking at this thing and we're seeing that it most likely made a nice move up here, maybe possibly even a 1 and a 2, a 3, and then right here, when this thing was selling down, okay, right here at this point, what were the indications to buy there? Okay, what was our indication? Okay, a couple things. One, that this wave here was downtrending. Okay, it was basically resistance right here. Okay, after this made a sharp move up, lower highs, lower highs, lower highs. This thing wasn't going to continue up until it broke this red line. So when we realized with the Elliott wave theory, we may have a 1, 2, 3, and a 4, and that 4 is actually coming back down where it could tag the support right here, because we already have this line drawn from these 2 points. From these 3 points, basically. 1, 2, 3. Once you have 2 points, you have a trend. So you can literally draw this line into the future based on these points. So we see the price falling, and it looks like it may very well run into the 6 hour cloud and the rising trend support here. And then we kind of maybe do some other ideas on it and say, okay, well, this actual wave started here and went to here. So this 50% retracement point of this wave that started here, went to here, the 50% retracement point of that wave is right there at the cloud, at the rising support line, on the 6 hour chart here. And what's my stochastic RSI look like? Right at that point. Bang. Showing me that if it bounces right here on the 50% mark on the rising support on the cloud that we're going to get a 6-hour crossover of our strength right here. And that could very well be the push that we need to manifest another wave out of this, to manifest another impulsive move up. Okay? And that's like four levels of confluence right there that point you towards a pretty good trade. Okay? They tell you that, we already have a 1, 2, 3, 4. We could possibly be getting another run out of this, and this thing went another like 60% at least, and it could, as long as it holds this line, it could pull out of here and continue on. So as I was saying, like alts aren't dying, guys. Alts are just selling down to their, retracements or their support lines until they figure out, the next move that they want to do, So we have a couple layers here of confluence of how to take this trade. What would make this be a good trade? Mapping out, we have a 1, we have a 2, we have a 3, a 4, that 3 wave, the 50% retracement of that 3 wave, is retracing into this cloud, is retracing into the rising support. It's a 50% retracement point. It's got a 6-hour crossover behind it. And then when you see it break the red line, that's the icing on the cake right there. It's telling you, like, this is it. This is moving up from here. Okay, this is moving up from here. And so, we want to, I don't really like to take a trade unless I have at least like 3 factors telling me that I should take that trade. Okay, at least, 3 factors. Because if you go on one factor alone, like if you were going to play a stochastic RSI crossing strategy, you're just going off of one factor, and that's it. So you want to have a couple of confluent factors together to come with the best decision to make your trade. You want to feel more secure that you're getting into a good trade, and you want to use all these different layers of indication for confluence. Okay, but I never use a strategy based on an indicator. I only will use an indicator as confluence, because we already have an idea of how this emotional pattern is going to fall, how it's going to play out, and how these Elliott waves are going to unfold, and the retracement points that they should hit, and where they should bounce, and our trend support, our clouds, stuff like that. So using the indicators and the oscillating indicators of strength, it gives us more of an idea of, hey, this is getting, if this move happens here, it's going to have the strength of the market behind it. Okay, and also with XEM, same way. So when we look at it on a monthly, it's telling us that there's a lot of room to grow out of this move. I mean, this is not weakening. This market is nowhere close to weakening. This market is growing and has a lot of potential that this thing could grow. So we know, on the monthly level, that, hey, this thing is really strong. It's gassed up for a huge journey. There's a lot of wind in its sails to push it really far. So we want to be looking to buy retracements, and we want to be looking to get this coin as it stays on its trend, and as it falls to its retracement points, or as it falls back to the cloud or falls back to the support line. We want to get that coin, because just looking at the higher time frame strength on the monthly is telling me pretty reassuringly that this thing's probably going to stay on this trend, no matter how much Bitcoin wants to sell down. Okay, wants to pump. This thing will, it'll sell down, and you can see here, this thing was doing nice, sold down here, and it's trailed down, 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 down. But where did it go? It hit the line, it hit the support line. If Bitcoin pops its head up again, this thing will probably, maybe break the support line, but come down here to the cloud in this channel, and then, wick itself back up and continue on, because it has that higher time frame strength behind it. Like, that's really crucial to point out to you guys, because when you look at the higher time frames and you see that you have a lot of strength in there, then it's telling you could be in that move for a while. Like even here, if we pop up right here and we're getting a 6-hour cross, this is telling me that I could play that move and buy the lows on like the 15-minute or the 5-minute chart for quite a bit. As this 6-hour oscillation rides off of this move, that we could play it on like a 5-minute and understand that, the strength in the market behind us, that we may want to stick to stick to riding the trend, buy this thing when it hits the trend or when it hits the cloud line, and play it like that. And even here, same way. So as we get these oscillations, like the 5-minute, like this thing's bouncing off the cloud right here as it gets this 5-minute oscillation of strength pushing it up, So the stochastic RSI tool is really golden, guys. It's going to tell us in every single time frame how we want to look at our trade. I'll use this 5-minute chart and the 5-minute stochastic RSI and how the price relates to support and resistance on a 5-minute chart to trade margin, to get into margin trades, like day trading, the trade that I'm going to take for like 45 minutes and then get out, or an hour or two or get out. And, using the stochastic RSI for those kind of moves is golden too, because it's telling you that, you got a pretty good move that, that you can get into here and buy when this thing's crossing and bouncing off the line, and then maybe it gets up here and you get a crossover back down to 5 minutes. Take your profit, walk away, and do a quick little swing trade. Okay, so yeah, using this, the oscillating indicators to recognize, your market strength at different times is crucial, guys. It's a golden tool. It's really a golden tool. Okay, all right. If you guys could just give me 1 second here, I just have to take care of something. Hold on 1 second. Okay, guys, sorry about that. Okay. So I use this indicator right here for almost everything, guys, honestly. Like, it's my #1 main indicator that I use for confluence. And like I was saying the other day, I use probably like 5 to 10% of all this stuff. I mean, there's different times for different things. Okay, like when the price gets really condensed, we'll talk about the Bollinger Bands a little bit, like maybe a little bit today and tomorrow, but I'll use those for like as the price starts to squeeze down, how it could pop out. Okay, we'll even put that on there because that's another indicator of strength. It's not an oscillating indicator, but it's another factor. Like when this thing, when those bands squeeze in, okay, and then they separate out, it's kind of your indication that there's a move happening. Like these things will tighten up. Okay, they'll tighten up in different time frames too. Okay, different time frames. Let's see here. Now you can see why I mostly just only use these things at some times, because when you start having a lot of stuff on the chart, it gets to be too much. Okay, it's like too much on your eyes and your visual, so I only use certain things for certain times. Like I would not keep the Bollinger Bands on here all the time unless like I'm looking at a market when it's in like a flat accumulative zone for when it could possibly break. Like when I'm looking at stuff like consolidating, how that would look as it's going to break. Okay, like here's a recent break here. Let me just remove these drawing tools real quick, guys. Okay, see how these bands were tight all through this consolidation period? And when these two bands split apart, okay, when they split apart, it's telling you that the price is going to change. It's going to move, okay? And whether it's up or down, the price could split down. These could split apart and the price go down, but they're going to split, okay? They're going to tell you that, And as they get tighter on like, higher time frames, like 2 hour, 4 hour, stuff like that, and you start to see these bands get really tight in here, like these got really tight right in here before this broke out, that's kind of your indication to keep an eye, because when these bands get really tight, it's telling you that there's not much difference in price. Like it's really like consolidating very, very tightly, very, very tightly until it has to snap out one way or the other. So I'll only put those on when I'm looking for, a market like this, like where I'm looking like, okay, this thing seems to be really tightening, consolidating. Let me put my Bollinger Bands on there and see if I can see it as it starts to break out. Because when you first get that first impulse, like even this little one right here, first little impulse, it changes the bands and splits them to where you have a little bit of an indication that, oh, this market's gonna go up. Right here, this candle right here was the first indication that it left. Even though it was a wick, it left its consolidation zone here, and by the next candle here, it was already splitting apart very blatantly. As this was falling down, this one's splitting up, and then you have that opportunity, to get into the market there on that break. So I'll use those for really only for the time when the market is consolidating and I feel like it's going to make a pretty big move soon, and I want to tune into it and see about how that would relate to my entry. But I would always really consider everything else as well. This was already oscillating in strength up, but the market really wasn't going anywhere until it broke here, the band split, and then you could tell, okay, this has the 4 hour strength behind it if it's going to do that. Okay, let's look at Bitcoin again here. And you can use that for, up and down splits. Okay, I mean, whether the market's going to, here's an indication here. Okay. The best time frames to see it on are going to be like 1 through the 4 hour, honestly. You rarely will see some consolidation on such a higher time frame level. But when it splits, it gives you an indication that, hey, this market's most likely going to go in the direction that it's, that the price is moving as that splits. Sorry, guys, it's not letting me drag the chart here. Come on. Come on. Drag it up. Okay. That's right here. All right. Trying to get back here to where the market's sold. Sorry, guys. Okay. Now here's an example of how it splits, and you can see that the market's going to go down as well. Also, and how that related to right here. Okay. Consolidated up, got really tight, and then we split apart the bands right here. The bands split apart, and the price started to fall. When you see that band splitting apart, okay, that's telling you that it's changing. That's the only thing I'll use the Bollinger Bands for, honestly, guys, is that when I see that the price is getting really tight and it's squeezing and squeezing, I'll put the bands on there to see how far it's squeezing in, and then watch for them to split. And whether they split up or whether they split down, they're going to split, but whether the price goes up or goes down on that split of the bands is your first indication of the direction that the price is going to go. Okay. Now here's a perfect example here of divergence. Okay. Of divergence. Price is going down. Okay. But right here, our strength was going up. So this is why you can't play just a stochastic RSI strategy. You have to kind of put a lot of different pieces of the puzzle together and find, confluence in that. Because if we would have bought the market here on this stochastic RSI strength cross, you're buying the market as it's going down. Okay? So you have to kind of like find your balance in how you use these indicators, because they're going to tell you different things at different times. Okay? They're going to tell you different things at different times. So that's why I'll only really use the indicators for confluence. to say, okay, I think that there's a wave 5 coming, or I think that there's a wave 3 coming, or I think that we're going to sell down or hit resistance here, or how does that relate to the price? Where did it go? Sorry guys, my chart didn't show. Let's try it again. There it goes. Okay. So you want to kind of get a read on the strength of the market and how that's going to affect your trade. You know, like what it's going to show you, and if it's confluence, if it's adding another layer of confidence in the decision that you want to make in the market, if that makes sense. You don't want to take a trade just based on any indicator, whether it's, you know, any of these indicators. I mean, that's not the way the market works. You know, like if you try to play a strategy where you're relying on an indicator to give you the trade, it's only going to be right like 40% of the time. And I tried that for years. You know, I thought, oh, let me try to use this indicator or that indicator, and eventually, guys, unless you really know, the only thing that's really consistent that I found, and that's why I use this strategy, is the emotions of the traders. It doesn't matter what you're trading, the emotions of the traders are going to be the same. And the Fibonacci points that the price falls to or extends to are going to be the same. And the way that the market unfolds with the Elliott waves is going to be the same. So, and that makes sense because back to the emotions, the Elliott waves are a representation of how the emotions are going to unfold, and the Fibonacci is kind of like the mathematics behind it. So that's why it's the same thing that's consistent, is the trader's emotions. These oscillating indicators, these will tell us one thing one day and something else another, and only be right 40% of the time. But if we use them as confluence in how we should take our trade based on our strategy, then it gives us a layer of confidence. You know, like like for instance, if this right here, I'm thinking about looking for a place to sell Bitcoin soon, or get out of my long positions soon. So where would I do that? Well, I would do that on, like, when I look at the chart and I say, okay, we've had a long move up, and our daily is pretty strong. Okay, when we hit resistance or we get into an area where I think it could sell, and we get these crossings over of like where we're losing our strength on like a daily, on a 12-hour, a 6-hour, we start to get that look that we're declining in strength. And you can see here the 12-hour has been almost this whole time since we broke out of this flag or this pennant here. The 12-hour has been up here, up here, up here. Even did a little oscillation like that, and it's up. But when we get in this resistive zone, eventually when this move expires and it's done its run, we're gonna see these. I entered a BTC long here on the break of here, and I actually entered another one here yesterday when I got stopped out of altcoins. I just basically put my money into Bitcoin. But we're gonna see this run come to an end when this 12-hour, daily, 6-hour starts to lose its strength. And that's when I would take a position to sell or to close my longs based on that. Like if this thing was getting up here and our strength was just crossing over down here, like in this kind of an area where it showed me there was a lot of room to grow, then I probably wouldn't close my positions, and I probably wouldn't even think about selling the market, because the market strength could grow from that point, if that makes sense. Like as we get up in these levels up here, all of these higher, this daily, the 12-hour, the 6-hour, they're all telling me that as we get closer to this resistive area up here, these things are going to get weak, and they're going to start to decline in strength again. And then I'll take the trade to get out of my long position and maybe find a short position in that area as this strength gets weaker. But if I was up in this area and I saw that the strength was like in this type of a situation where the strength was setting itself up to get stronger, then I would probably not enter a trade and I would leave my longs open. I would probably not enter a sell trade. Now, but keep in mind, the fact that our 3-day looks like it wants to cross, and, you know, our weekly wants to cross, it's telling me that, you know, this thing could come here and do a retracement of this entire move. Okay? Something like this. And while that something like this happened, the daily, the 12-hour, the 6-hour would all get their little oscillations, you know, lose their strength and gain their strength again. But that weekly might just start to, you know, just start to tilt, just start to kind of like, you know, stay in its area where it wants to cross over, because this has to do a whole nother oscillation. So it's one of those things that's like, it's almost harder to explain than to experience. Like, you guys are going to find your flow with it as you go through the charts and as you know, map out the market and how you think the market's going to move. But the main thing is to express to you guys that getting a read of the strength of the market when you want to get into your trade is very important, because, like, when I look at the weekly here on this tells me that, okay, if we break through this resistance, that, you know, this is the kind of move down here, this kind of a crossover that could grow into more potential higher highs. This is the kind of thing that's telling me that if we do break this resistance, we're set up to grow for weeks to come and make new all-time highs on this kind of a level. But on this kind of a level, it's kind of telling me that, okay, this particular move that we're in, you know, when it gets a consolidation or it gets a correction, it's most likely going to be when this, you know, loses its strength, or when the daily loses its strength, or when the 6-hour at this point loses its strength. Now, I'm not saying this will oscillate all the way back down to here, but it'll be obvious that we'll start to get the seller step in, and then this tilts down, and the 6 hours tilts down. And, you know, will give us an indication that, yeah, we're getting a retracement. And look, the 6 hour is already even doing it here. That doesn't mean that the 6 hour won't do something like this, pop back up like this. But it's kind of getting us an indication that we may be getting close. You know, we may be getting close, especially because we're running into this resistance areas. Now, how you put all those pieces of the puzzle together, you're definitely going to come up with your own flow, you know, your own strategy, your own, not your own, so much your own, but your own, like, techniques of putting all the pieces together. Because this is just like, it's just like reading a language almost. Like, you know, like when I first moved to Costa Rica, I didn't really even know any Spanish, and now I'm pretty fluent in Spanish. So when you first look at the charts, you know, you don't really know what to look for, but as you do it enough over and over and over again, you start to know exactly what to look for. You know, you start to see very telling signs of certain things, you know, happening. Let me move this line a little bit like this. I mean, this thing looks like it's getting pretty close here to not being able to cross 1200 here. Would I get into a position to sell the market just now? Maybe not so much just yet. You know, I would kind of like wait for extreme confirmation at this point, which is basically like where I start to see those, you know, like let's say the 12-hour and the daily tilt and start to look like they're not growing anymore. And for final confirmation, when this line breaks. Basically, this is a support trend this entire thing is riding on. So it's almost better to just say, let me just wait for confirmation that this trend right here breaks. You know, get a little confluence in my trade to say, okay, our strength is going to be weakening now. We broke this. We couldn't make it through resistance. We're breaking down our trend. Our strength is getting weaker. This entire move that this thing made on this trend most likely needs to get a retracement. And, you know, most likely we'll get like a 38, 50, maybe, you know, 61. But I mean, this thing seems pretty bullish now after this run, that we may very well only get like a 38 or 50%. But when that does that, whether it's here or whether it's from up here, when this does break this green line right here, okay, when it breaks that and it starts to consolidate or retrace, I can almost guarantee you that the alts will pop right back up, and bounce off of their support trends or their retracement levels. I mean, the inverse relationship between the two is, you know, it's always been there, but in the last like 3 weeks, it's been astounding, honestly. Like, let's look at XMR. And so when you guys are playing, you know, your alts and stuff like that, keep these kind of things in mind. Okay, keep these kind of things in mind. Okay. Now you can even see here. Get rid of Stochastic. Since this point, let's even go to like the hourly. Especially on this last move here. Okay. Look at how these two are inverse related to each other. Okay. This thing was holding. Let's get it in here pretty good. Right about. Sorry, it's hard to get this exact here, guys. There we go. Okay. This was holding a relatively good retracement here in this level, right about here. Okay. But right here, as it was holding that level, okay, it seemed like it was, you know, holding. This is basically the 50% retracement of the entire move. Okay. This Monero was holding a 50% retracement for a while, waiting for the right moment to spark out of here and create its next wave up. But since Bitcoin right here bounced, right here, where people thought right here that Bitcoin was going to sell down, okay, and then it bounced. When Bitcoin bounced right here and it bounced up to run up towards 1200 again, the alts took that as a time to sell down to the next retracement level, okay? So the way that these markets interweave with each other is very important, okay? It's very important. And how the strength of the market in each of these markets interrelate with each other is really important too, because, okay, now check this out. Like, we understand that, let's get rid of the comparison, and we understand that Bitcoin on like a daily level, let's say, is at the point where, like we were just discussing, if it meets some sort of resistance in this area, whether it's line or whether it's the, you know, the retracement back up a little bit higher, somewhere in this area, this move should come to an end, or at least get a consolidation. And that will probably happen as our stochastic RSI runs out of strength here. Now you can double click on the chart. If you double click on it, it takes away your indicator on the bottom. Double click, it comes back. Or double click on the indicator and it takes up the whole screen. So just kind of like little tricks to just kind of like get a really good glimpse at it real quick without having to zoom it. You can just kind of double click on it, okay, and get like a more of an in-depth look at it. And you can still even scroll it like this and, you know, get a real indication like this of it. But as this daily for Bitcoin is at its maximum strength, and when it wants to sell down, it will most likely get across and decline in strength. Well, let's look at the altcoins. Let's look at Monero like we just looked at. Where's Monero at? Well, the opposite, okay? The opposite, meaning that this thing is on the floor. On the floor, the strength is the weakest that it could possibly be. I mean, literally right now, the market strength right here, as you can read over here, is like 1.7 and 1.9. Okay, so if you want to multiple trend lines, is there a key to? I have to look. I missed that. Let me read it here. If you want to do multiple trend lines, is there a key to get another line instead of clicking on something like that? Sorry, I didn't really understand that question. Is there a key to getting another line? Why don't you shoot me that question like or on email or a little bit more in depth, and I'll try to answer it for you because I didn't really understand it there. But what I'm trying to convey here is that these things have made new impulsive moves, okay, and now they're waiting to make another impulsive move. Like this thing is wedging out, okay, basically creating that wedge between its downtrend and here. It's like basically like creating the wedge. So as we discussed, this was basically hanging out here on the 50% mark, wanting to look for a place to come out and create its next wave. But then as Bitcoin popped up, this sold down. Where did it sell down to? Well, it sold right down to the next retracement level, right down to the 61, and it bounced right there. Now, does that mean that that's where it's going to stabilize? I wouldn't buy it right now, because what if Bitcoin says that it wants to, run up for 1220? Well, this thing might panic, sell down to the 78.6 and create a spike right there. So these are very, I haven't given any trades on these alts yet, because I want to see what Bitcoin does and be sure that Bitcoin is breaking down, so that these are going to break up. But look, when we point out Bitcoin's at its maximum strength on the daily now, and when it reaches the end of its move and corrects, that daily strength will decline. Well, these altcoins that are inverse related, look how long this thing has been oversold. It's been oversold for almost like 12 days. Okay, this entire period from here all the way until now, this coin is oversold. It's on the floor. It basically it doesn't mean it couldn't get sold down more and panic sell more. It's just saying that this is the weakest the market has been. This is the market is very weak right now. Okay, and the way that this has an inverse relationship to Bitcoin, when Bitcoin wants to hit the point where this moves over. Okay, when Bitcoin wants to hit the point where this moves over, and our daily, let me go to a daily here, wants to cross and start to get weaker, okay, then this move will consolidate or correct, and the strength in the market will get weaker as that happens. And meanwhile, in the altcoins, the price will start to go up and create more, that next wave that we're looking for, and the strength in the market will start to grow again. Okay, it will start to oscillate back up. So, this is kind of another layer of indication here that's kind of telling us that for our strategy, we're expecting some sort of a third wave to come out of here. Okay, first we thought it was going to come from this 50% zone and bounce out. And that didn't happen because it wasn't able to happen from this 50% point. Even though the market needs to get strong again, since these things are inverse related to Bitcoin, if Bitcoin is going to pump and kind of pop up and do an impulsive little push there, people are going to chase Bitcoin. People are going to play Bitcoin. People are going to trade Bitcoin and just say, oh, let me get out of this coin. And so it's really interesting because we can play this inverse strategy. Okay, this would have been a good place to possibly buy Bitcoin, expecting it to hit the 61%. But same way that we got in here and maybe up here, as soon as the price goes away from your entry, if you got here at 156 or whatever, and the price is here at 165, put a stop loss at break even. That way, if Bitcoin wants to jump up again and this wants to sell down to the next retracement level, you're stopped out at break even. So at this point, instead of me giving trades on where to enter these altcoins without seeing Bitcoin finish its move yet, it's kind of jumping ahead. We want to see Bitcoin finish this move and start to break down, and then we can kind of know, all right, let's get back into our altcoin plays. Let's look for confirmation that they're going to continue, which would be breaking this line, growing on our daily strength again, and those kind of things. And put all the pieces of the puzzle together, how they fit together, and use this is a very good indication here that this market here, once this pulls out of here, okay, once this is done an impulsive number one move and a correction number two move. Now we don't know where the correction is going to fall. That's the one thing about Elliott Wave. We can play this impulsive side here, but this correction, we don't know how far it's going to fall until it falls there, or until it breaks this, downtrend line that it creates, or breaks the wedge that it's wedging out in. But we get a little bit of an indication, if we see now that Bitcoin starts selling off and breaks its trend line, okay, this, Bitcoin is riding on a trend, basically right in here, okay. Once Bitcoin breaks that line, and starts breaking down and consolidating and correcting, we're most likely going to see this break this line. And then we have confluence that it probably is turning around because it 61% retraced. Our daily strength for this coin is starting to grow again. And then we have a large impulsive move that could come out of this because the market strength will grow again. People will be selling out of Bitcoin and getting back into altcoins again. So it's, putting all these pieces of the puzzle together it creates a very unique strategy in trading Bitcoins and altcoins because they are inverse related with each other. And we want to keep that in mind as we're trading because this is something that's very unique to cryptocurrency. Like when I trade stocks and foreign exchange and gold, silver, corn or rice or whatever, there is really no relationship between anything like that. You're basically just playing, technicals or maybe like a fundamental thing for that currency pair or for a certain commodity. But with Bitcoin and altcoins, we can really start to incorporate this into our strategy here where when Bitcoin's pumping up like it did yesterday and everybody's, panicking saying, oh, alts are over, alts are dead, and all the complaining and, misery that everybody has about the altcoin market. Well, that's really, we understand the relationship and we could be looking for places to buy that fear and buy that, that panic of everybody being like, oh, alts are dead and, So we could look like this would have been a good buy here, but a good buy here to protect yourself as soon as you get into profit. Okay, as soon as you get into profit. Because there's no guarantee that this move for Bitcoin, isn't going to continue up just a little bit more. And if it continues up just a little bit more, then there's going to be all those people that bought here that are going to panic and maybe, sell at a loss and sell it down to here. Now, I probably would put buys here on the 78.6 because that's pretty low of a price for this at this point, considering how oversold it already is. All right. So, it's going to be hard to get the first couple times that you do it. But it's the same thing with Elliott waves. You don't see them at first until you really start to practice it, and then you say, oh, wow, okay, it's happening again. It's happening again. Okay, this is a painting in Elliott on a weekly time frame. Oh, wow, I just saw an Elliott on the 5-minute. So it's practice. It's practice. And how you fit all these pieces of the puzzle together, you may do in your own order. You may say, oh, let me check this first before I check that and have confluence in other factors. But understanding the way that all these things go together and getting a read of the market strength is very important because I would take this trade here, okay, in this area because, it's at a Fibonacci point, whether it's here or here, and the market is weak. It has to oscillate back up at some point, so you're buying the lows. But would I buy right here at this point if the market was, all the way up here, at its maximum strength, looking like it's going to get weaker? No, I wouldn't take the trade. Okay? So, that's something to really keep in mind because that's going to be like your determining factor of like, if the move that you're getting into, if you feel like it's got the potential to push you all the way that way, And here, yeah, I feel like if I get into a buy position here, and we break this line and, we start to get some good momentum here, I feel like it has the strength of the market that could push us to those higher highs. But if the market's already, very strong at that point, then I wouldn't take the trade. I wouldn't take the trade at all. I would say, oh, well, the trade entry may look good, but our market strength is still overbought, really strong. I don't think it's going to bounce too much further from here, if that makes sense. So, you want to put all these pieces of the puzzle together, and how I use this indicator is very unique to using it with my strategy because I'm just understanding that out of one market cycle comes another, and out of one wave will come another. And are we going to have the strength to make those journeys, basically, is the way that I'm looking at it. Like, are we going to have the strength for Ripple? Is Ripple going to have the strength to make a new all-time high, okay, on like a monthly level? Okay, and when we consult the chart, it's kind of telling us, yeah, Ripple broke this downtrend, You know, it came all the way up to here. It probably consolidate for a while, but it has a lot of monthly strength to make a new high. A lot of monthly strength. When we look at Ethereum, when Ethereum broke out, okay, on like a monthly level, again. Now Ethereum doesn't have tons and tons of data here, but we could tell that right here when it broke out, our monthly was going to grow. Okay, our monthly wasn't going to start to decline. Our monthly was going to grow. And we check our weekly at that time. It also gave us an indication here. When it bounced here, that first bounce inside the wedge, come on, where's it? Right here, was the beginning of that weekly strength. The strength that it took for us to push this line. And then as we pushed out of here, we were at the strongest point in the market that we could be at. The strongest point in the market. So the market's going to make very big moves when it's at its strongest point, and it's going to have the ability to grow to those moves from its weakest point. Okay, which kind of makes sense. You know, we're talking about strength and weakness, but when you put all the pieces of the puzzle together and you see how far something could go, then it kind of gives you some confluence of whether or not you would want to take that trade. Okay, so that's it for this day, guys. I'll catch you guys on Monday, and I'll probably be getting some signals out over the weekend because it looks like Bitcoin will probably, you know, show itself here in the next day or two what it's going to do here, because it's getting pretty close to you know, the resistance line, and after that line would be the 88.3, and then, you know, a possible double top in this area. So we're getting close. We're getting close to where this, you know, has to correct or consolidate. And when that happens, you know, the alt party will start again, basically. So I'll catch you guys on Monday. Keep stacking the Bitcoin and enjoy. Take care.